Good morning. You're watching the market right here on ET Now, and more news flow over the weekend. It continues to, be ablaze. Tensions and on a razor's edge. In fact, in West Asia, Israel's airstrike on Iran continues for a third straight day now, hammering oil refineries and nuclear facilities, and also killing over 400 people, according to a US-based rights group. In fact, Iran has hit back with missile strikes, some slamming into Israeli cities. In a twist, reports say Donald Trump vetoed an Israeli plan to assassinate Iran's supreme leader. Meanwhile, Benjamin Netanyahu claims Iran tried to kill him with a missile strike that missed his bedroom window. Reports came out of Iran early this morning of a 2.5 magnitude earthquake about 35 kilometers from the Fordo nuclear facility itself. In fact, since the developments in West Asia have many repercussions, not just for crude, natural gas, chemicals, but of course global markets as well. So let me take it across and get in the latest developments and try to analyze what they really mean for the world. And we've got Srinjoy Chaudhary from the Times Network here with the latest.
First of all, Iran was the target of Israel, but that related to nuclear weapons and enrichment sites and military sites. But from there, Israel has widened its scope. And now, apart from enrichment plants and Natanz and military sites, they have hit targets which are logistical, like oil depots and so on. Iran, on the other hand, has launched a flurry of missiles at Israel, many of which have fallen on Tel Aviv, which is a civilian area. There have been casualties on both sides, perhaps more in Iran's side, but nevertheless, both sides have suffered casualties. And at this rate, this missile barrage from both sides is continuing. And this is beginning to cause concerns all over the world.
All right, thanks, Srinjoy, for getting us all those details. But indeed, the biggest impact that we are seeing is on the crude oil prices, because with the Iran and Israel conflict that is underway, the biggest risk is actually whether or not it will lead to the closure of Strait of Hormuz. And that is one of the key critical parts and developments that we are tracking. But talking about the crude oil prices, and the crude oil prices did surge again over 3% on Sunday as Israel bombed two major gas facilities in Iran's South Pars field and stuck an oil depot near Tehran. Now Iran fired back, damaging a refinery in Haifa, stoking fears of a regional energy war. Now, US crude jumped nearly 4% to more than $74 per barrel mark, while Brent continues to hover near that $76 per barrel mark. But that's on the top of Friday's 7% spike that we have already seen. And this is marking the biggest weekly gain since Russia invaded Ukraine in 2022. Now, Iran is threatening to shut the Strait of Hormuz, which is a choke point for 1/5 of the global oil, and analysts warn that the prices could shoot past $100 a barrel mark if it happens, though some doubt that Iran can pull it off as well. But talking about the past that we have seen in some of the instances, be it back in 2011 and 12, where we had Iran sanctions threat and Strait closure as well. In that case, we have seen a 25% spike happening in the crude oil prices just in the span of 6 months, and it actually took 4 months for oil to come back to those normalized levels. Back in 2019, we had the Gulf tanker attacks, wherein a 10% spike in the span of 3 months we have witnessed. It actually took 1 month to oil to cool off from those levels, and recently 2023 and 24, where we had that whole Red Sea issue, and globe over we have seen the impacts not just on the oil but in the other sectors as well. Therein, oil did spike almost 15% in the span of 4 months, and it took 2 months for the oil to cool off from those levels. And this one being the recent, Aisha, wherein we have already seen almost a 12% spike in oil just last week.
Yeah, 12% last week, 7% on Friday alone. And again, overnight, you're seeing a 1% uptick with direct, of course, repercussions on sentiments on India as well. I mean, Brent is back at this elevated $75 per barrel mark, which we thought would be foregone history, but clearly not. And that definitely is having repercussions for the global equity markets too, right?
Absolutely, Ayesha. So this is a very major commodity, big impact coming in on global markets, but in terms of equities as well, right? If you take a look at what the US markets did on Friday, there was a shade of red across the board. You had Dow that closed almost lower by 1.8%, S&P was lower by 1%, Nasdaq was lower by 1.3%. But on the contrary, if you take a look at what the US futures are doing as we speak, they are in the green right now, and it's at least looking like a slight bit of a positive start for the US markets when they open later today, because you have Dow, S&P, Nasdaq futures that are all up anywhere between 2 and 0.3%. So at least that is a sign of optimism coming in for the US markets when they open later. But if you take a look at what the Asia markets are doing, it's mixed, largely coming in because you have Australia and Japan that are doing exceedingly well. In fact, Nikkei is up 1% as we speak, but it's mixed cues coming in from Hang Seng and Shanghai. Shanghai seems to be doing pretty okay. Hang Seng was in the red last, but it's absolutely flat as we speak. So the escalated tensions that we're seeing in the West Asian region are keeping markets jittery. Another big event over the course of the week is going to be the US Fed meeting, wherein they're expected to hold rates steady once again this week. Remember, there is increasing pressure coming in from Donald Trump on the Fed, but it seems like they're going to hold their ground and keep the rates steady. At least largely, that is what the street is indicating. You have dollar index that slipped below the 99 marks. That's going to be another major indicator to watch out for, as is going to be the US 10-year bond yield. That's come at 4.4%. But over the course of the week, if you take a look at amid all of these escalations, how the US market has done, they've still managed to hold on to their ground to some extent. For S&P and Nasdaq, slight bit of a cut coming in, but other than that, Dow has seen a 1.3% cut over the course of last week. So that's what the global market picture is looking like largely.
Well, yeah, absolutely. And even for our markets in the week gone by, we lost about 1%. Now, you can call it, there was no deep correction there. We were coming out of a very long, prolonged consolidation period as well. But I don't think till the time you have the West Asian conflict settled down, or for that matter, any big cue for our markets actually coming in, that you will see the markets take a big directional call. If nothing, it will be largely very ranged, is the sense that one is anticipating. Of course, it's really been about more and more blocks. That's been the flavor of the equity markets, be it promoter-led or otherwise. So we've been seeing blocks. We've been seeing the FI selling persist. The quantum is not as large, but yes, Friday was definitely a biggish figure. About 1,200 odd crore rupees was the selling that you had from the FIIs. So till the time you don't see crude settle down, because that's the direct correlation of the tensions in West Asia, you're not going to see any meaningful move come by from our markets. That fervor post-policy seems to have well been digested for now, at least. But Ankur, hi, morning. What's the global commentary like overnight?
Good morning. Let's get started with important commentary from Donald Trump, who keeps all of us busy. Now, he has mentioned about Iran that US has got nothing to do with the attack on Iran. If we are attacked by Iran, they will respond with full might. But there is a hope in his commentary, and he mentions that Iran and Israel should make a deal, just like I got for India and Pakistan. Again, he has made comments before the countries have actually made it, and many calls and meetings now taking place over Iran and Israel. Also, look at the comments coming in from UK PM. He has mentioned that UK has grave concerns about Iran nuclear program. In fact, he mentions that he is working with France, Germany to de-escalate the tensions, and none of three allies were involved in Israel attack which has happened. He also mentions no obstacles left to finalize US-UK trade deal, and hopes to complete the trade deal with US pretty soon. Also, look at the comments which are coming in from MBS, who's Crown Prince of Saudi Arabia. He mentions that Israel attack on Iran violates international law. In fact, in supporting Iran, he says that attack have disrupted ongoing dialogue to resolve the crisis surrounding Iran's nuclear program. Also, look at what Bank of America is mentioning on the gold front, after the gold has been on surge ever since these tensions have emerged, and BofA mentions that gold could hit 4,000 an ounce in the next 12 months, and this level could be there and also unlikely to fade no matter the result of Senate negotiations. He also mentions about the rate volatility and a weaker US dollar should keep gold supported. Also moving on the trade deal itself, there are comments which are coming from EU president that good call with Trump ahead of G7 meeting which is ongoing this week, and says discuss situation in Middle East with Trump. He also mentions that commitment to EU-US trade deal by July 9, that is the deadline which is there for all the countries. Also, Japanese Prime Minister has made comments that there is no change on the stance which was there on seeking removal of US tariffs. I repeat, seeking removal of US tariffs, and he says that he has agreed with Trump to meet in Canada, and that is on the sidelines of G7 meet, and agreed to accelerate talks for mutually beneficial deal. In fact, Bank of Japan is also meeting today, so all eyes will be there what happens there as well.
Well, yeah, absolutely. A lot of trigger points that we're awaiting, but let's welcome on board Arvind Sanger and talk about what could be in store for our markets and the globe. Arvind, hi, good morning. Good to have you on the show, and evening to you. Arvind, what could be the ramifications of the West Asia crisis? Because it doesn't seem like it's peaked out, or in fact is anywhere close to that.
Well, I mean, you're absolutely right. There is no clear resolution on what's going on. And I would say that, there are two possible, maybe three possible ways this could go. One is that you see an escalation where Iran does take action on trying to close the Strait of Hormuz, which would invite intervention by the US, and the US would, come down very hard to make sure that those pass stays open, and that could get US involved in a conflict with Iran. Another would be if Iran retaliates, including, attacking US bases in the Middle East. That too would involve the US in a retaliation. And the third would be this, war between Iran and Israel continues for a few more days. One side is firing missiles, the other side is, got its aircraft over Tehran and attacking. And at some point, the conflict kind of ebbs. Some kind of ceasefire is declared. And to me, in two out of those three cases, whether the U.S. is involved or whether the war just continues on its own, I don't think there is an interest, certainly on the side of the U.S. or because of the U.S. interest on the part of Iran, to significantly impact oil export infrastructure. If nothing happens either on Karg Island, from where Iranian exports go out, or on Strait of Hormuz, from which entire exports of the Gulf region, whether it's Saudi or Kuwait or Abu Dhabi or Iran or Iraq, all of the exports go out through the Strait of Hormuz, or not all of a significant portion of their exports go through the Strait of Hormuz. So either Karg Island for Iran or Strait of Hormuz, if either one of those get attacked, then you could have a spike in oil prices. Our central case remains that there's a 25% probability of something like that happening, but the 75% probability is that this will remain a hot conflict, but without directly impacting oil infrastructure. But there's one other thing. Shipping companies are going to be avoiding calling in or charging a significant premium because of the risk and uncertainty. So that is going to cause the cost of oil to go up, which it already has. So even if nothing happens, you could see for a sustained period higher shipping costs, less ships willing to call, which will again raise the price of crude, which might cause crude prices to sustain in the 70s. So those are the factors to keep in mind from a crude market standpoint.
Okay, Arvind, hi, morning. This is Snehi also joining in. Want to understand your view on how much do you think investors have already priced in the possibility of a full-blown conflict in the Middle East? Because if you see right now, the US futures are trading in the green. This could be on the back of comments that Trump has said there's no involvement. He's also vetoed the killing of his Iran's supreme leader. So to what extent do you think the market has priced in the impact of whatever's going on?
Well, to the extent that the market thinks that the most likely outcome is that this will remain a conflict between Israel and Iran without a significant impact on the oil infrastructure, then the market's looking through this $75 crude and saying, in the next month or two, crude price will settle down. It'll be back in the 60s. And so the global economy will not be significantly impacted. That's the central case that the market's now coming around to, at least for now. Unless something changes, these disruptions, short-term oil price disruptions, are buying opportunities. So in that sense, I think after the correction on Friday, I think global markets are seeing a bit of a breather. But look, this is wars are unpredictable things, and we'll have to wait and watch. But I think I agree with the point that if this is not heating up much more in terms of oil infrastructure, then global equities should start to show signs of some modest recovery from here.
Seems like the core point right now, or focal point right now, is crude oil prices, and only then one can take a equity-based call. But who better than Vandana Hari to answer that? Vandana, hi, morning. Good to have you on the show. Things still pretty much, building up when it comes to West Asia. But tell me, we've already seen a 12% spike on crude in just the last 1 week alone. Where are we headed?
Good morning. So I think that whatever risk premium the market had to assign on account of the Israel-Iran tensions is already embedded in crude. So we saw most of that jump happening on Friday when Brent and WTI settled higher on the day by about 7%. What you can see quite clearly from this morning's action, at one point when the markets opened, crude Brent jumped back towards $78, but very quickly pulled back, very similar to the price action we saw on Friday when it actually settled nearly $3 below the intraday high. And we're seeing the same action. We've seen the same action this morning. What that tells me is there's a bit of tug of war in the market in regard to how much supply risk to assign to this whole situation. And as of now, the consensus is that there isn't a real risk, a threat to supplies from the Middle East or the waterways, such as the Strait of Hormuz and the Bab el-Mandeb Strait. So the market it will probably be now in a holding, crude will be in a holding pattern. The market will be in a wait and watch mode. My base case remains that that Iran and Israel strikes against each other will remain targeted, relatively restrained, and at least deliberately they will not be targeting the oil infrastructure in the wider region. We know that both of them have targeted to some extent infrastructure in each other's countries, upstream and downstream oil and gas. But the wider Middle Eastern oil supply, production and supply is not under threat as of now.
All right, but Arvind, help us understand that what could be the implications on the global markets and especially the emerging markets, because for the week gone by, yes, there was a sell-off. Even you were highlighting that the markets for now are seeing a bit of a breather. But Arvind, in what time do you believe that the markets will digest this fact and move on? Because this particular week, we also have the FOMC meet, the trade talks are going on. So give us some sense that how do you see the markets moving?
Well, to the extent that that oil remains in this mid-70s range with the risk premium, but without anything happening, I would say that markets should start focusing on other economic drivers. And the Fed meeting is most likely going to be a non-event. We don't expect any action by the Fed. But I think the trade talks we should hopefully in the next few days and weeks get some clarity there, because the market hates uncertainty. So you have uncertainty on the crude oil side, you have uncertainty on the trade side, and yet the markets, the pullback on Friday was very modest compared to all the uncertainty. The markets are still very close to recent highs. So I think that clarification of uncertainty is essential for the markets to continue to perform, and that I think trade is the big one. I'm assuming again that Iran, Israel stays contained to direct attacks on each other, and frankly, I would just add not meaningfully so far on Iran's oil export infrastructure, because if Iran's oil export infrastructure is targeted, if 1 million barrels or 1.5 million barrels of Iranian exports are impacted, then that could have significant, it may not have as big an impact as the Strait of Hormuz, but if for whatever reason Israel goes after Iran's export infrastructure, that could cause another $5-10 or more spike in prices. But barring that, I think that markets should be focused on other things and should remain well behaved.
Okay, Arvind, thanks for that view coming in. On that note, we'll let you go. Thanks so much for joining us. But Vandana, I want to get your sense on what you believe the next OPEC Plus action could be. Do you believe they are going to increase their supply to try and stabilize the market, or do you think they are going to hold back to ensure some profits?
So the statement that came out of OPEC on Friday was that they did not see any direct threat to supply, any shortages in the market, and no need to act immediately to the situation, which was a bit of a contrast to the International Energy Agency, which had earlier issued a statement saying that its members stood ready to put oil into the market from their emergency reserves. So in terms of what OPEC Plus does in the coming months, my expectation before this Israel-Iran conflict broke out was that the 8 members that have been accelerating the unwinding of their 2.2 million barrels per day of cuts will remain on that trajectory. So they've already done that for 3 months, and I expect them to remain. This is more, I believe, a response to internal tensions and an attempt to preserve cohesion and peace and calm, solidarity within the group, rather than anything necessarily in the market outside. So this is OPEC Plus turning inwards and looking at what it needs to do to preserve, to stay intact. I expect OPEC Plus to stay on that trajectory. By the time they take their next decision on their monthly the unwinding of the cuts, hopefully this Iran-Israel conflict, the dust would have settled on it. So I don't expect this particular conflict to change necessarily that trajectory of accelerated unwinding of OPEC Plus cuts.
All right, Vandana, so good having you today, this morning. Thank you so much for taking the time out and speaking with us.
Thank you.
All right, viewers, let's move on and let's talk about the Indian markets then, because yes, Iran-Israel conflict is the biggest talking point. We're already seeing a boil in the crude oil prices, and generally it is not good for the Indian markets. But back home, just last week, we did see a sell-off, and especially on the Friday, wherein it was almost a 200 points fall coming in on Nifty 50, while more than 500 points of decline when it comes to Nifty Bank. But where are we placed today morning? What kind of a setup are we working with? Let's try to decode that with our experts on the show. Let me welcome Sahej Agrawal, Head of Derivatives at Kotak Securities, as well as Kunal Bothra is also joining us on the show. Very good morning, gentlemen. And Sahej, firstly, let me come to you. Help us with your take on Nifty 50, especially because we are now once again testing that 24,700 mark. Where do you see Nifty for this particular week and for today as well?
Good morning, Shrishti, and good morning to all the viewers. So I think, the markets are a bit tactical at this point of time, wherein if I were to look at the larger picture, I think we are still in a trading market and not a real trending market. And within the trading market, you usually have volatile moves coming in, and especially when something of this sort on the global front happens, obviously the volatility is set to rise significantly. So I believe volatility is going to stay around, and not really expecting a real trending move as such. Having said that, given the short-term setup of the market on the basis of the data, we strongly believe that 24,450 is a very, very strong support level for the market. Coincidentally, when we witnessed a gap down on Friday, Nifty made lows around the same level and bounced back. So I think that's a pretty critical level for the market, and I would strongly believe that if there's something really negative that the market is anticipating, then real downside risk really could possibly start from there. So at this point of time, I believe 24,500 is an extremely strong support level. And on the higher side, in the last week, we saw call writers taking over the put writers in terms of the aggression and the pricing. So the upside seems to be capped around the 25,000 mark, where the highest open interest is placed at this point of time. So broadly, I would say 24,500, 25,000 is the range that I'm looking at. And for the rest of the June series, only if 24,450 breaks do I anticipate any meaningful risk for Nifty 50.
Kunal, what is your own sense? Although the implied open is indicating a mildly positive start, but what happens next?
So I think we should be in for a good bounce for the markets today. I think I would probably expect the Nifty to try and at least come back towards 24,700, 24,900 to 25,000 mark, just very close to that. So this 50-60 point gap up move, I think that should extend for itself. And I'm expecting that the markets would probably see at least a couple of days of more follow through up move post that. But then I think again we are trying to just about amble into this range of 24,500, 25,000, 25,100 as a resistance for the index. Now the only change in data point which has happened, and that's quite a dramatic change in terms of data point, is the jump in the open interest. And start of the June series, for the first 8-9 days odd, there was almost like a withdrawal of 16.8 lakhs OI on the Nifty futures. For the first time on Friday closing, we saw a built up of 4 lakh contracts for the index futures. So that indicates that traders on Friday, when the markets opened on a negative note, 24,500 thereabouts, I think they managed to open up some fresh long positions on the indices. So that's one of the major reasons why I would believe that we could be in for a decent bounce for the index over the near term.
Okay, so that's Kunal's take on what we can expect from the market today. But Sahaj, what are you making of some of these oil-sensitive counters, the likes of OMCs, you have paints, aviation? Because if you see the likes of Oil India, they have closed in the green on Friday, and also a bunch of these shipping stocks. Stellar gains were seen across Shipping Corporation, Garden Reach, Cochin Shipyard. So where do you think this basket of stocks is headed in today's trade?
So I think, considering the fact that you have significant volatility going around in the crude oil, which jumped and tested the 78 mark before settling a little lower. Yes, the sensitive sectors which are going to benefit out of this hike in the crude oil prices surely are going to benefit out of it. But I think, again, broadly, this is more of a short-term sentiment, which is positively as well as negatively impacting the relevant sectors. So I would say, just go with the flow. The momentum which is there for the short term could last for a little while, and that could benefit. Apart from that, there's no strong structural change that I'm looking at, because as I mentioned, if I were to step back and look at the broader picture, I still believe some consolidation is here to stay. And on account of the global news flow, we're witnessing elevated volatility. So I would treat this as a trading opportunity for the relevant sectors.
So Sahaj, what's your stock list like this morning?
So I'm going a little conservative at this point of time. One is Cipla. That's a stock that I really like at this point of time. It's been consolidating. It's made a good base of around 1,450, witnessing some positive moment. But again, the markets have pushed it back to a little extent because of the news flow. But I believe 1,450 is an extremely strong support. Multi-day bottom it made over there on the high side. The stock is expected to test around the 1,580 mark. So that's one opportunity that I really like. The other one that I think has been significantly underperforming over the last few weeks and not participated in the up move that the markets have witnessed is ACC. Stocks currently trading around the 1845 mark. Good support at around 1780. It's made a double bottom kind of a structure at 1780. Underperformed, good value proposition, and on the higher side, 1970 seems highly possible. So these are the two stocks that I like at this point of time.
All right, so those are the two buy calls coming in from Sahej. Let's watch out for that, Cipla as well as ACC. But with this, Sahej, we'll let you go on that note. Thank you so much for taking the time out today morning. But Kunal, what about you? Which are your stock ideas for today?
So I'll go with two buy calls. BEL, Bharat Electronics, was apparently one of the better performing names, even though the stock closed a little flat on Friday. But then I think, looking at the intraday reaction, the stock still is holding on to its major support points of 388, 390. So keeping 388 as a stop loss would suggest a buy with 404 as a target for BEL. And the second would be a buy in Glenmark Pharma, one of the more consistent performing stocks in the pharma pack. The stock has climbed levels of 1600 plus in a very slow, gradual manner, and then now breaking past above or coming very close towards its previous major highs. So the momentum seems to be continuing for Glenmark Pharma. Would suggest 1710 as a target. Stop loss could be kept at 1640.
Okay, so those are the picks that Kunal is recommending this morning, and it seems to be the day of pharma today because both our experts are betting on one pharma stock each. For Sahej, it was Cipla. For Kunal, it's Glenmark Pharma this morning. But on that note, we'll slip into a very short break and talk about stocks to watch out for in today's trade on the other side.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
आपकी फेवरेट हुंडई कार्स पर मिल रही है अमेजिंग डील्स। वैसे लोगे तो आप हुंडई ही, चाहे दिल की सुनो या डील्स की, तो जल्दी चले आओ हुंडई शोरूम। मेरी नई हुंडई एक्स्ट्रा तुमने भी तो कल नई कार ली है ना, उसमें भी तो होगा ना ये वॉइस इनेबल सनरूफ
है ना अंकल, सिंगर इनेबल सनरूफ।
और बेनिफिट्स ये तो मिले होंगे ना,
ये मिला।
हाँ, हुंडई कार्स पर मिल रही है अमेजिंग डील्स। वैसे लोगे तो आप हुंडई ही, चाहे दिल की सुनो या डील्स की। मेरी नई हुंडई एक्स्ट्रा, अरे तुमने भी तो कल नई कार ली है ना, उसमें भी तो होगा ना ये वॉइस इनेबल सनरूफ
है ना अंकल, सिंगर इनेबल सनरूफ।
पैडल शिफ्टर्स वो तो होंगे ही।
जस्ट पैडल्स।
डील्स और बेनिफिट्स ये तो मिले होंगे ना,
ये मिला।
हाँ? इन्होंने तो लॉलीपॉप ले लिया, क्या आप भी लेना चाहोगे? बिल्कुल नहीं, तो जल्दी चले आओ हुंडई शोरूम। आपकी फेवरेट हुंडई कार्स पर मिल रही है अमेजिंग डील्स। वैसे लोगे तो आप हुंडई ही, चाहे दिल की सुनो या डील्स की।
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter. It's not about left or right. It's about what's right for India. It's about holding the powerful accountable.
India Upfront with Pranesh Roy. Weeknights at 8 p.m. only on Times Now. No spin, No compromise, just the truth.
For over 30 years, my journalism has been relentless, fearless, and uncompromised. My stories have breached lofty ivory towers and brought down the high and mighty. And I won't stop.
When the clock strikes 9, it is time for the news hour. Navika Kumar asks the legitimate question.
When your rights are trampled, I will be your voice, demanding answers from the corridors of power.
News hour at 9 with Navika Kumar.
Journalism is a mission, not just to seek accountability or a fight for justice, but for honesty and integrity. Voicing citizens' concerns and using the truth to demand answers, ensuring that you comes first on agenda. Watch News Hour Agenda with me, Maludas Balakrishnan, weeknights at 10 o'clock.
Welcome back to the market right here on ET Now. As of now, the GIFT Nifty is indicating a gap-up start for the Indian markets. But let's also tell you which are the stocks that are going to be in focus in today's trading session. And let's go across to my colleague Varun, who is standing by with that list. Varun?
So let me start with Natco Pharma, because US FDA has inspected the Hyderabad facility from 9th to 13th of June, and they have issued Form 483 with one observation. Syngene, US FDA has inspected the Bangalore facility from 10th to 20th of Feb 2025, and they have actually issued EIR with voluntary action indicated, and also the Semicon Park facility has received Form 483 with no action indicated. Nazara Tech, Rekha Jhunjhunwala has sold more than 3% stake on Friday's block deal, and from 9th of June till last week, she has actually sold entire 5% stake in Nazara Tech. NTPC, the resolution plan submitted by Maharashtra State Power Generation Company and NTPC Consortium for Sinnar Thermal Power Limited, has been approved by the Committee of Creditors. Godrej Properties, the company would be developing around 14 acres of land parcel into premium residential project in Bangalore, and the overall revenue potential for this project is around 1500 crores. ITC, the company has acquired share capital of Shrestha Natural Bioproducts for around 400 crores. Yes Bank, Moody's have upgraded the overall rating of Yes Bank to BA2 from BA3, and the outlook has been changed to stable. And keep an eye on Bata India, because there are media reports circulating that the global CEO, Mr. Sandeep Kataria, has resigned from the company. So keep an eye on Bata also.
A lot of stocks to look out for, but let's welcome on board Sandeep Sabharwal as well and find out what is it that we should be focusing in on when it comes to the India markets. Sandeep, hi, morning. It's already been a 12% spike that one has seen in crude in just the last 1 week alone. Do you think the markets have factored that in? Are we in for a rebound today, or do you think this is going to be an elongated process? What is going on in West Asia and how crude is likely to impact here on?
On the ground, the market reactions, both from the Israeli markets as well as Asian markets today, reflect that people are taking this in their stride. We need to be somewhat wary, because the conflict has started just 3-4 days back, and it could potentially last for longer, and the actual repercussions will also need to be seen on the ground over the next 1 week. So the best guess could be that it could prolong to around 10 days, and to that extent, it could create more volatility. Now, directionally, as far as macros go, as we have been discussing in the past, India is pretty well placed on most parameters. The crude might have spiked 10%, but then it spiked 10-12%, but it spiked from extremely depressed levels, like it had been continuously falling for months. And to that extent, the $72-73 barrel rate is not really either inflation creating or disruptive. But if it goes to 85, 90 because of whatever reason, then the impact could be there. So making estimates on how this crude spike will affect Indian inflation, CAD, etc., just on a few days movement, I think that makes little sense. So overall, I would think that the market reactions show that the markets believe at this stage that the impact will be limited. It could be limited, it could have some more impact, but I don't think it will have a lasting impact. So, as an investment strategy, any corrections are only buying opportunities.
Sure. But Sandeep, if it spikes all the way to 85, then obviously we're likely to feel the heat, right?
That will only happen if the Strait of Hormuz gets blocked. Otherwise, globally, oil is very well supplied at this stage, and there is no real shortage. So, the major spikes would typically happen if there is a real shortage, and on top of that, you get disruptions. So I think speculating if it will go to 85, 90, or after, if this entire conflict dies down in 10 days, whether it will fall back to 60, we don't really know. So I think we will take a better bet or evaluate it further, maybe after a week.
What's the chart reading though? Is there indication that the spike up is going to persist in crude?
It should persist for some some more time, because it's not as if the crude index is topped out. It's neither as if, so there was, I think on Friday there was a point when the index was overbought, but then I think we retraced from the intraday highs on Friday for both Brent as well as WTI for the crude oil. So I think that's where I would believe that maybe there could be a chance that you might see these the asset class coming back into a retest of at least its Friday's major high, and that itself could be a jump of another 5 to 7%. So it still doesn't look like that we have gone into that topping out formation for the crude oil prices. Now the only question over here is that whether crude oil sustains this kind of a steep up move, because over the last, I think, 2 months or so, we've seen crude oil prices rising from sub 60 levels or 60 thereabouts to now on the verge of breaking that 80 plus mark, sustaining about those levels. So which means that this has been a steep rise for the crude oil prices over the last 1 to 2 months. The only question is that whether it can sustain or not. As of now, the indicators are not overbought, but we may need to see over the next couple of days if there is a chance that the indicators come into an overbought territory.
Okay, so that's Kunal's take on where crude prices could be heading on the charts at least. We have Chandan also joining us this morning. Chandan Taparia joining us. Chandan, hi morning, and thanks so much for joining us. Give us your sense of where you're seeing the market texture today over the course of week, given the kind of news flow and escalation in the Western Asian region that we've seen over the course of the weekend. Where are you seeing the benchmarks as well as the broader markets headed?
Good morning. Thanks for having me. So market got stuck in a range from last 25 trading session where the multiple supports are visible at 24,442. But at the same time, we have seen sustained supply near 25,000, 25,200 level. On last trading session, it opened negative but managed to hold the same support zone near 24,442 and moved higher. So I believe some sort of consolidation could be there. However, the global market might give the capped upside, but domestic trigger could give the sustained buying interest at lower level. So I believe we have to play the broader range between 24,442 to 25,000 as of now. Talking about Bank Nifty Index, that has been making lower top, lower bottom from last 4-5 days. But again, the good part is it managed to hold 55,000 added to 55,500. So I believe 55,000 could act as an immediate support. So both the indices are likely to see the range bound bias with key multiple support at lower zone.
Right. Okay. So Sandeep, you made a valid point that there, if there are corrections in the market, they should be bought into. But question being, what is it that you would recommend buying right now?
So I think it will be more of domestic-oriented sectors like financial, banks, NBFCs, industrials, which could include capital good companies, infrastructure companies, or on a reasonable connection, even defense companies, because they have not really corrected, and this conflict is also only creating a upside bias for those stocks. So then at this point of time, tough to find value, but eventually we could. And so I think these would broadly be sectors. And then if at all there is a broader sell-off, then we could find opportunities in other sectors also.
All right, but Sandeep, also help us with your take on Sun Pharma, because though our technical experts are liking pharma space for today, but specifically Sun Pharma is in the news flow for not a positive reason, as US FDA has once again issued a Form 483 to one of their key facilities, that is Halol, with 8 observations. This number is looking quite big as of now, though we are not aware of the kind of observations that US FDA has come out with. But this particular facility has been in the news flow and has been under the scanner of US FDA for almost a decade now, with no significant respite coming in. What is your take on that, Sandeep?
So Sun Pharma is a stock we held for a very long time, but we have now exited last month because of the company's increased expenditure on launching some products, etc., and some slowdown in some key products, which we think could slow down earnings growth for the next 12 to 15 months. Now, this Halol project is very strange actually, because they've been trying to resolve it for so long and it keeps on coming up under the scanner. So I'm not really sure what and why it happens, because all these large companies have such key people to look at these aspects, and they should actually not be failing any of the FDA inspections, but they regularly keep on failing. So very tough to say, but it is a key facility, so I think for them, so there will be some impact.
And we're still to see the nature of these observations. Yes, there are 8. We don't have details beyond that. But Vedanta, that's going to be on focus today because of its board meet, which is slated for 18th. It's going to be considering perhaps its first interim dividend for FY26 after a series of many earlier. Ashesha is here to tell us what else to expect, and of course the dividend history as well. What is it hinting at as to what could be the payout for this financial year? Ashesha?
Well, yes, Vedanta will be in focus today because they will be considering first interim dividend for FY26 in the board of directors meeting that is scheduled to happen on the 18th of June. Now, remember, although this is the first dividend for this fiscal, Vedanta has a strong dividend payout history. In FY25, they paid a total dividend of 43.5 rupees per share. In FY24, 40.5 rupees per share, and about 101.8 rupees per share in the year prior. Remember, Hindustan Zinc last week declared a dividend of 10 rupees per share, which translates to a total of about 4,225 crores. And Vedanta owns about 63.4% stake in the company, which means by virtue of 10 rupees per share dividend that Hindustan Zinc announced last week, Vedanta will get about 2,660 odd crores, excluding tax implications, if any. Now, if Vedanta goes ahead and distributes this full amount as dividend, remember Vedanta Resources owns about 56.4% stake in the company, which means Vedanta Resources will get about 1,500 odd crores, and shareholders of Vedanta will get a bare minimum of 8 rupees per share. So that's the kind of dividend expectation the street is likely to have from the announcement that is likely to come on the 8th of June. Now, there are several triggers for Vedanta Limited. One, of course, is demerger of its companies into 4 companies, which is likely to happen in the next few quarters, and the company has also announced a slew of capex plans across its divisions, be it aluminium, steel, or several other segments. So for now, Vedanta will be in focus on account of this dividend announcement in the board of directors meeting that is scheduled to happen on the 8th of June.
Okay, Ashesha, thanks so much for taking us through that. Vedanta board to meet on the 18th of this month to mull its first interim dividend for this financial year is what we're understanding right now. But Kunal, what are you making of Vedanta on the charts? Last 1 year, the stock has not done all that much. Last 6 months, we've seen a dip. But recently, we've seen some improvement coming in the chart of this stock. Do you believe that's sustainable?
It's sustainable, but it's not exciting as a chart for Vedanta. There was a point where Vedanta was one of the better performing stocks. I remember, I think in Feb 2022 or 20 or the subsequent months after that, when the Russia-Ukraine crisis actually took off, that was the point when the stock in the next 2-3 months fell by 50% from 400 to 220 thereabouts, and then subsequently post that the stock saw V-shaped recovery. From 220, the stock at one point jumped up to 500 plus as well. But the fact is that the stock has been unable to surpass those levels of 500 thereafter. We've actually seen the stock being extremely volatile. So those true metal counters which are extremely volatile, very prone to news flows and the trends not being sustainable. That's the concern with the charts like Vedanta. As compared to this, if I look at say the charts for Tata Steel, SAIL, they are far more reliable and far more consistent in terms of the price pattern. So Vedanta can rally if the entire metal counters go into a breakout mode. But as of now, we are seeing just about a very fragmented move towards many of the individual metal counters and not a strong cohesive move across the pack. So that's why I would believe Vedanta can also try and just about amble into this range of 450 to 485, 490 thereabouts.
Okay, so that's on Vedanta. But this morning, we also have a note coming in on HDFC Life by Antique, wherein they're positive on the stock. And this is on the back of the management meet that the company had recently, wherein they also believe that headwinds are behind them and Q1 FY26 seems to be shaping up better. Chandan, what are you making of the chart of HDFC Life? And if you have to place your bets within the insurance space, would this be the stock?
Yeah, so SDFC Life has seen decent recovery in this year by more than 22%. And before that, it was just consolidating in last 3-4 years. However, in last 3 weeks, we have seen a corrective move, but major trend is positive and the stock is holding well above its rising support trend line with the hold of key moving averages. So I believe positive bias could be seen in the counter with support of 734. I believe this stock has potential to again rally towards 775 to 780 marks. Apart from SBI Life, I believe SBI Life, apart from SDFC Life, SBI Life could be the other name. Just a couple of days back, it was giving the breakout, but due to the market profit booking, it drifted lower. So buy on decline could continue with support of 1720. SBI Life can head towards 1820 kind of level. So SDFC Life and SBI Life both could be on radar.
All right, so that's about the life insurance counters. But yes, all eyes will be on HDFC Life on the back of the Antique note. Let's go across to Varun for more details on what were the key takeaways from the management meet and what is the target price coming in from Antique as well. Varun?
Definitely. So there was a management week with HDFC Life and Antique has come out with a note on the same. They have a buy call on the price, stock with a price target of 860 rupees. Now they say that the regulatory concerns and the competitive pressure, they seem to be receding and management reiterated their aspirations to grow AP better than the industry and actually double AP every 4 to 4.5 years. Now they say that the Q1 of FY26 is actually better than what they were actually estimating, with the April and May posting the overall retail AP growth of around 10% and the overall AP growth of around 14.4%. Also, the management is focusing on driving higher absolute VNB growth rather than margin. In fact, they say because of the favorable product mix and also overall the growth that the company is delivering, the overall VNB margin would be better, but that would be actually reinvested into distribution and technology, and hence the VNB margins would be range bound, but the overall VNB growth would be better. Also, they say that the agency and broker channel, they will drive the overall growth for the company, and the overall bank are to focus on the profitability. They expect 16 to 17% CAGR growth in APE and VNB over FY25 and 27, and hence they have a buy call on the stock with a price target of 860 rupees.
Okay, that's that on HDFC Life. Sandeep, you're not a fan of insurance plays, are you?
Not so much, because the performance of these companies has been very volatile and the growth which was expected out of most of these companies has not actually played out, both in terms of the parameters which most analysts measure to ascribe value as well as the profitability growth. So I think these have been, so insurance has been a sector which was supposed to be sunrise and supposed to do very well, but the delivery is not as great. So typically, I'm not looking at this sector at this point of time.
All right, don't like the sector overall at this point in time. But Sandeep, also help us with your take on Bata India, because the stock has been hammered in the trade for quite some time now, and especially post the earnings, which was indeed a dismal set. And in the latest, some media reports suggest that CEO Sandeep Kataria resigns after 5 years, so the official communication is still awaited. But just on this news flow, if you have any take, and also on the valuations, because the stock is already near to its 52-week low, give us some sense that how do you see Bata India?
First of all, the global CEO has resigned. The India CEO has not resigned. So I think that's something we need to be cognizant of. So there is no direct impact on Indian operations at this point of time. Secondly, as far as performance goes, the performance has been significantly languishing. The entire footwear segment has been going through a deep slowdown for the last 3 years, which is reflected not only in the performance of Bata but other companies which are listed on the footwear space. And there is a belief that many D2C brands, etc., are taking away market share. That's why these companies are not growing. But if we track the raw material suppliers to these companies also, that also reflects that the slowdown is for real. This is also in a way reflective of what's happening in the overall consumer sector, but on the footwear side, it's been more drastic. There should be some consumer revival this year because of lower inflation, lower interest rates, lower tax rates, etc. And how that percolates down to the overall consumer sector and the footwear sector will determine how the stock will go. You rightly said that it's near 52-week lows, so most of the negatives seem to be in the price. But whether volume growth and value growth will come back, that will determine how the stock will do. Otherwise, it will continue to be in a range.
Okay, that's the take coming in on Bata. Asian Paints, by the way, just had another sizable block, I think 80 lakh shares or something. And just last week, you had Reliance as well announcing the sale of that 35 million shares in Asian Paints. That equates to about almost $900 million of cash added to their kitty. Now, there is speculation in the market whether this is going to actually lead to the fourth monetization cycle on Reliance, and where is it that they're going to spend this money. Sandeep, what is your take on whether now Reliance can finally be the counter wherein you can see some big announcements coming in terms of where they will deploy this 2,200 odd crore rupees from the stake sale of Asian Paints pouring in?
I think this sale also is likely to be that of Reliance, which was left off last week. Now, they don't get 2,200 crores. They get overall, I think, around 10,000 odd crores. And they have huge debt, so they can just use it to repay the debt. And in terms of news flow, we don't really need more news flow coming out of Reliance. We actually need them to deliver on the new investments and profitability from those investments and generate some cash flows. So if they do that, then we will see another re-rating cycle. In any case, the stock has done well lately and should do well because we should see a good earning cycle over the next 2 years. How much the new ventures will deliver in terms of profitability will determine how much better the stock can do.
I stand corrected. It's actually 2,200 rupees per share. That was the selling price. And yes, it's a good sizable $900 million added to the cash kitty after this stake sale in Asian Paints. But Kunal, what's the chart reading on Reliance Industries right now? Do you think it's finally going to, begin participating more aggressively in the market move?
It should do it. So I think it started to show those signs initially from 1150 mark towards 1400, 1440 levels for Reliance Industries. It's been a fantastic rally, almost like I think in a matter of 3 weeks or 4 weeks, as the stock has managed to recover 300 points, 300 to 350 plus points. for Reliance Industries, and that's a very strong kind of an up move for a large cap, heavy weighted stock, the Nifty 50 name for itself. And now I think at current levels of 1400 plus minus say 50 points, 70 points for Reliance Industries, the stock is just about going through a time-wise consolidation. And we've seen time and again that whenever the stock gets into a time consolidation at the lower end of the price, which is closer to this 1400 mark, the risk reward becomes extremely lucrative and attractive for traders to try and build positions over here, because then it becomes just about a matter of time that the stock comes back into a breakout mode. So I would believe closer to this 1400 mark, Reliance could be a very good risk reward buy.
Okay, good risk reward buy on Reliance is the view coming in from Kunal. But Chandan, I want to come to you and talk to you about the entire real estate space. After the rate cut that was delivered by the RBI recently, we also have individual banks that are now cutting home loan rates. So largely positive for real estate. Today we also have news on Godrej Properties. Tell us where you see Nifty Realty headed, because it's seen quite the run up recently while the other sectors have not been doing all that well. So what's your view on Nifty Realty and where would you be placing your bets in that sector?
Yeah, so Nifty Realty has seen a decent run up in last 4-5 weeks, really do well by more than 15-20% from lower levels. And the stance from the RBI governor was quite positive for the sector. So to comment first, I'll focus on the Oberoi Realty. This stock has given a consolidation breakout from the bottom on the weekly chart couple of days back, and after that the trend is intact. It has seen a corrective move in last 3-4 days due to the market weakness, but major trend is intact on the short term point of view. So I believe with support of 1865, it can head towards 1960 kind of level. Godrej Property also looks good. Major trend is turning upwards. It has retested a key support zone. So I believe with support of 2350, one can look for an upside target towards 2500. So both the counter or most of the real estate is giving the buy on decline stance in the market scenario.
Sandeep, you had a knee-jerk reaction, I guess, or call it the overall market weakness on Friday when Interglobe Aviation fell about 5% at the session lows, recovered a little bit, was still down about 3.5% on lows. Perhaps a reaction to the very unfortunate Air India incident. But do you sense, A, that there could be a further decline in the stock? And if there should be a further decline, should it be bought?
In the near term, there is a possibility there could be a further decline because some of the Western aircraft routes remain disruptive, so that could impact some aviation traffic. Some aviation traffic from international passengers could also get disrupted because of the various conflicts which are going on. But it's a very strong company with a base which is unlikely to be disruptive. So I think such corrections will only give opportunities to long-term investors to buy. The extent of the correction and how long it will last will depend on how long the entire conflict, etc. lasts. But overall, I think in next 8-10 days, we should see some settling down, and to that extent, give opportunities in Interglobe Aviation also.
All right, so let's watch out for Interglobe Aviation. But with this, Sandeep, we'll let you go on that note. Thank you so much for taking the time out and speaking with us. So we also have the first rates in the pre-open session, and for now it's a gap down. What the pre-open rate are indicating almost a flat start for the Nifty 50 near about that 24,700 mark. We'll let those rates settle in for a bit. But yes, all eyes will be on Bajaj Finance as well, as the shares of the company will trade X bonus and X stock split from today. So let's watch out for that counter as well. But with this, let's also get you some of the mid-cap bets from both of our experts then. And Chandan, you go first. Tell us within the mid-cap basket, which is the stock making up to your list?
So I selected to be positive on the selective IT name. Even if market corrects or consolidate, IT counter could see some buying interest. So Tech Mahindra is the name where I suggest to go long with support of 1625. And as per the positive price pattern similar to cup and handle on the weekly and the daily chart, expecting it to head towards 1720 to 1740 levels.
Kunal, what about you? Where are you placing your bets amid the mid-cap basket?
So I'll go with the buy on Oil India, a stock which was in the thick of news flow as well as a strong price uptrend for good part of the previous week. The stock closing almost at its weekly highs above that 470 plus mark. So would look out for 490 as a target for Oil India, and stop loss could be kept at 468.
All right, so those are the mid-cap bets coming in from both of our experts. All eyes on that. But let's also tell you what's really happening apart from the world of equities. And first up, all eyes on crucial G7 summit, which is taking place in Canada amid rising global tensions. Prime Minister Modi will attend the summit after invitation call from Canadian PM Mark Carney, and US President Donald Trump is also likely to fly down for the summit. Now remember, he walked out of the G7 in 2018. At least 4 people have been killed and 4 more are missing after flash flooding in Western Virginia. According to West Virginia governor, about 3 to 4 inches of rain fell in less than an hour, causing flooding in northern parts of the state. Gujarat has announced day of mourning today as the funeral of former State Chief Minister Vijay Rupani, who lost his life in the tragic Air India crash, will take place in Rajkot today. The national flag will fly at the half-mast. Home Minister Amit Shah is likely to be in attendance.
Well, unfortunate news continues back home because a devastating incident has taken place in Pune as an old iron bridge collapsed amid heavy rainfall, killing 4 and injuring 51. The sudden collapse, triggered by a surge in the Indrayani River, swept away several people as tourists crowded the area. NDRF teams have rescued almost 40 persons so far, and the government has announced 5 lakh rupees aid for the families of the deceased. And on the weather front then, Kerala remains on red alert with southwest monsoon rainfall continuing to batter most parts of the state. A holiday has been declared for educational institutions in some districts as a precautionary measure. Meanwhile, Mumbai witnessed heavy rainfall in the early hours today, leaving several parts of the city waterlogged. The IMD has issued an orange alert for the day.